Alright, so today we're going to be continuing the trading series. If you remember in the last part in this series, what we were doing was setting up Trading Light here so you guys could set it up the same way I have it going forward when we do get into the actual trade strategies and what kind of confluences you actually need to be looking for on the charts to enter those trades. But before we can get into any of that, what I wanted to do today was go over the routine you need to become a trader so that everything you do has a structure to it and you're not just willy-nilly coming in here and just trading when you think the chart looks good off and on without recording your thought processes or even the P&L from every trade, right? You have to be tracking everything, because if you're not tracking everything and recording everything you're learning down somewhere, you are just not going to learn and you're not going to improve, and you're not going to be able to see that improvement because you don't even track your P&L. So it's very important before you even start trading, right? Before you take that first trade, you need to go ahead and build a system. Today we're going to be looking at the system that I use, but just know there is no guideline to this, right? There is no right or wrong when it comes to, your trading journal or tracking your P&L. It's just whatever works best for you. So without further ado, let's get out of Trading Light here and let's jump into what I use to structure all of my trades. So to start off here, we have my trading journal. I just used Google Slides to make this, right? It's not too complicated. You can use whatever software you think is best for writing out this stuff. I just happen to use Google Slides here. Today is all about just giving an example, and then I want you guys to go ahead and kind of take these examples and form your own system that works best for you, because obviously everyone's mind works differently, and this is all about just taking all the information you have learned from trading and being able to comprehend it in the best way possible for you. So this is what my trading journal looks like. First page here is my key. These are a lot of the main indications I will use to enter a trade. And no, this is not an exhaustive list of every single confluence I use to get into a trade. It's probably not even half of them, but I do feel like these are very important and it's easy to visualize for me. So I went ahead and put these specific ones into the key with different color codes, and you'll see how they actually work when we get into some other pages. So sweep protocol. This is the only chart structure I will trade as a sweep structure, right? Liquidity sweep, swing fail pattern. This is essentially when price wicks up past previous highs or down below previous lows, sweeping the liquidity and getting back into the value area, getting back inside those highs or lows, confirming that it did not want to actually accept those prices. It was simply just grabbing liquidity, which gives you a high probability that was your exact high or low. Now you can get a sweep of a sweep a lot of the times because liquidity will build on that wick almost immediately from impatient leverage traders. Price will go ahead and sweep that low one more time before finally continuing up. So that's definitely something to note, but we'll get into that later on when we actually start looking at taking these trades. Right now I'm just showing you this because it's the first part of my trading journal, right? The protocol I use, and that is why I went ahead and put it here on my first slide, just so it's a reminder of what I need to do every time I enter a trade. Going on, we have a planning example. This is an example of how much I put into a trade if certain prices are met. Right, so when I open up my charts every day, I'm going to be identifying levels that I would take a trade, and then I will be color coding those levels to know how much money I'm actually going to risk if those prices and structures are met. Right, this does not mean that I am just going ahead and putting limit orders in on all these boxes. Blind limits, right? Absolutely not. No, I'm waiting for price to actually get to those levels, and if I see what I want to see, then I will go ahead and enter it. If you know where this is on Bitcoin, this is back when Bitcoin made its low around 24.8, and because it swept those lows before going to these prices, I did not take any of these shorts. This was only if it were to have gone up before sweeping the range low at around 25.5, so take that into account, right? You never blind limit this stuff. It's only areas of interest where you can take trades, right? It's not like you will take a trade, but if price is not in the box, you won't. All right, so this is the color coding I use for, deciding how much I'm going to put on a trade if it reaches those prices. Moving on, this is the meat and potatoes of the trading journal, right? This is what every page here on out looks like. In the top left here, you can see the image of the actual trade being taken for this page, right? So every trade I take, I make a new page in my trading journal, and I use the arrows to signal the confluences for taking that trade. I go ahead and label that in the edge on the right over here, and the result is indicated on the bottom below. You can see in this first one, I did not actually end up taking the trade because I was not ready for it, but I did go ahead and put it in the journal here because I still thought I had some good information to know for next time. All right, so this is how I structure my trading journal. Every page from here on out looks like this. We'll go ahead and just view one more. Again, edge on the right, result down below. The trade I actually took is the picture. and the arrows are marking the confluences or indications tools that I use to actually take the trade. This is how I'm able to keep track of every trade being taken, look back on it, and figure out what went right, what went wrong, what confluences happened that gave that outcome, what was my mindset during the time, right? Because right here I had a long bias, so I didn't want to take the short, and that's why I missed it. So it's always good to note emotions as well, along with the technicals. And speaking more to the emotional side of things, your mindset during the day you were taking those trades. You want to keep another trading journal, which will be your kind of idea book, your notes book, where you write about everything you thought during your trading process throughout the day, as well as things you learned during that day. And that is exactly what you're seeing now. This is a physical trading journal where I write down my thoughts and ideas every day for trading. You can see it's pretty messy. It's not very systematic. It's really just kind of getting my thoughts onto paper so that I can look back at it in the future, right? Once a month, I will go through and read through my months of thoughts and trading ideas to remember what went wrong last month so that in the new month, I can go ahead and correct those errors. I star some of these ideas, which are more important, but this is something that most people do not do. And if you're able to really take the time to create a trading journal, to create an idea book, you will be leaps and bounds ahead of every other retail trader. And this is what separates the 5% that make money versus the 95% that lose money in the markets. You have to think about this like a sport or competition where it's you versus them. And many of them are professional traders that have been doing this for decades. They work at hedge funds. They live and breathe this stuff. So if you're going to compete with them, you need to take the time to write down everything that you're learning so that you can improve on it going forward. Because I guarantee you, if you just try to memorize your mistakes, you will continue to make them month after month. You need to write this stuff down so that you can go back and look at it, figure out what went wrong, and fix it. Lastly is going to be tracking your P&L. Once again, there's no right or wrong way to do this. It's whatever works best for you. I've gone over many iterations of it in the past, and going forward in the future, I'm sure I'll be changing it up as well, just like I'll probably be changing up my trading journal or idea book going forward in the future. And as we can see here, this is back in May. Something I didn't really use for very long, but it's kind of an idea. And this actually was not for tracking my current trades, P&L. This was for Bitcoin backtesting, which, backtesting is something that's definitely not necessary, right? There's a lot of reasons backtesting does not work. But I think if you have not spent time in the markets, it's always a good idea to backtest your strategies so you can just get kind of an idea going forward, and you have some of that pattern recognition just from looking at the past. So you can see here I kind of had my green lights, right? Confluences to enter a trade. I went ahead and marked out which ones were actually profitable, which ones were not profitable, and that sort of thing. But you can see I never really completed this. But you can see obviously I never really completed it. So how important is this? Not really. But I thought I'd include it in this video just to kind of give you guys some ideas. Moving on, this is going to be my actual trading setup from May, right? This is what I used to track all of my trades. I went ahead and just put in some examples here, right? These are not actual P&Ls from my trades. Just to give you guys an example, as well as I had my whole portfolio here on the right. And I tracked my portfolio in this as well. You can see I deleted all of that because that is personal information. You guys do not need to be knowing the exact amount of money I have. And then below that, we have all the indicators that I would have used to enter the trade, the win-loss ratio of each trade, the setup test, right? So you can see an example, DMOF, right? So this would be a double bottom, a market cipher div, an open interest div, as well as a fib level used. And that came out to be negative, whereas when I used just trap traders and money flow, it came out to be a winning trade. So of course those are not real examples, but just to give you an idea of how you can go in depth on this to really fully fledge out your strategy. And then finally, we're going to go over here to my latest iteration of my trading tracker. It's very similar to the last one, except for this one takes out all the other assets besides Bitcoin, because once you find the asset you want to trade, you stick to it, right? I don't think it's a good idea to be trading all the assets you can. It's hard enough keeping track of one. So that's what I recommend, and that's why I went ahead and only trade Bitcoin nowadays. You can see I have real simple P&L on the left, as well as what confluences I used to get that P&L. Again, I went ahead and deleted most of this stuff. I have my portfolio over here on the right, which you cannot see. And then I also have these lines here If I do have any ideas that I thought were real important, instead of just putting them in my notes book with a star next to it, I can actually throw it in here. When it comes to trading, simpler is always better. So that's what I'm trying to do now, is just simplify everything down to the bare necessity. But yeah, that's going to be all for this video. Of course, if you did learn anything and want to continue watching this trade series, make sure to subscribe so you don't miss my next video, as well as join the Discord, links in the descriptions if you have any questions about any of this stuff or anything else regarding crypto or trading in general. And with that being said, thank you all so much for watching. I will see you all in the next video.